Hey, what's up, guys? This is going to be an unlisted video for my friends from San Antonio Bitcoin and Crypto, SATX Crypto, and I'm just going to share with you guys one of the videos from this lesson here on Udemy.com, Advanced Stock Trading Course and Strategies. And this is a pretty comprehensive course loaded with a lot of advanced information. But one of the ones that I think is especially valuable, and I think a lot of you guys who are trading on shorter time frames like the 5-minute and the 10-minute and the 30-minute and maybe the hour can get some value out of, is by using the VWAP, the volume weighted average price. And so I'm just gonna let this play and record it and upload it to a private video so that you guys can check it out. And I'll leave it at there. Let me kill the mic, drop the background audio, and start the video for you guys. Just hit me up in the chat, which is visible on the screen right now, the SATX crypto chat, or hit me up on Twitter, and my Twitter's up there as well. So enjoy, and let me know if you have any questions. This is some good shit. Later. Sorry, you know what? I just realized that the volume is going to be way down on the video. Let me just kill the background audio here. And let's try this one more time. All right, here we go.
In this lecture, we're going to be talking about the VWAP, which stands for Volume Weighted Average Price. Now, you might have heard about this before, but this is probably one of the most underused and undervalued indicators out there. It's extremely, useful. Okay, what is the VWAP? The VWAP is going to basically price or give you the average price based on the volume that it traded. So, for example, imagine this. Imagine we had a stock that had, let's say, 4 trades. Okay, so let's say we have a stock. It traded 100 shares at $10, and another 100 shares at 11, and another 100 shares at 12, and then 1,000 shares at 13. If I tell you what's the average price that it traded at, well, one might say it's, it's here. It's, we have 10 plus 11 plus 12 plus 13 divided by 4 should be 11.5. That's the average price, okay? Somebody might say that. That's incorrect. Why? Because if you look at the volume or the quantity that it traded, it's not the same. Here there was only 100 shares. Here it was only 100 shares. Here it was only 100 shares. Here there's 1,000. So the right way to do it would be, 100 times 10 plus 100 times 11 plus 100 times 12 plus 1,000 times 13. So then you divide by the total quantity, which is going to be 1,300 shares, right? And then this will give you the right price, okay? Which should give you somewhere, in around here, okay? Let's say, I don't want to calculate. So let's say, how much is this? This is going to be 1,000. This is going to be 11. So 1,100, 1,200, 1,300, 1, 2, 3. So that'll give you 13,000 with 1,200 and 1. So let's go 1 here. 4, 5, 6, 300. Excuse me if I make a mistake. I might have made a mistake, okay? But whatever. Calculator. And how much did we say? We said, yeah, 1630, 16,300 divided by 1,300. 12.5, yeah. So I shouldn't have actually calculated that because it was pretty obvious. So about 12.5. So the average volume weighted price is 12.5, not 11.5. And why does this matter? Because volume does matter. Again, let me ask you this. Imagine in your neighborhood, okay? Imagine your neighborhood, usually houses sell there for $400,000 or $500,000. Now imagine one day, one house sold at $2 million. Does that mean that all houses in your neighborhood are valued at $2 million? No, it's just this one house that sold there. It's not as meaningful. But if hundreds of houses in your neighborhood just sold at around $2 million each, well, would that be more valuable as of information? Would that be more valid? Yes, because the quantity is bigger, so it is more meaningful. The bigger the quantity, the more meaningful it is. It's the same thing in trading. If you have a stock that traded just 100 shares here, or 200 shares here, well, that's nothing. How meaningful is that? So that price is not as meaningful as a price where the stock has traded a lot. So by looking at volume weighted average price, you're actually averaging the prices that it traded at, but while taking into account the respective volume. Okay. Now, why this is important? Not just because of that it's more meaningful, but because of something else that actually has a big impact. So let me ask you this, how do institutional traders get paid? And when I'm saying institutional traders, so you have, a portfolio manager, and that portfolio manager might have, a fund that's worth 100 million. And he has to invest that fund in a bunch of different stocks. And he has analysts that choose those stocks for him, okay? He also has traders that their objective is to buy the stocks that he tells them to buy, right? So he might come and see a trader and tell him, hey, I want you to buy, 10 million shares, 10 million shares of, company ABC, okay? And the trader is going to have to go and buy those shares. Now, how is this trader going to get compensated? Is he going to get paid if the value of the stock goes up? Or, no, because he didn't make the decision. He didn't decide if it's a buy or a sell. He didn't come up with the recommendation. His only job is to buy the shares. Now, how does he get paid? Or how does he get a bonus or compensated for good performance? Because obviously he does have a base salary, but they also have a bonus or a performance bond type of deal where if they did good, they're going to make money. So how do we decide if a trader did good or bad? We decide that by looking at the price that he was able to buy at versus the price of the VWAP, right? So if the volume weighted average price of the stock is $12.50, that's on average where it traded, but your trader bought on average at $13, well, that's a bad price. If he bought 10 million shares on average at $13, while the volume weighted average price was $12.50, that means he didn't really get a good price. If on the other hand, your trader was able to buy 10 million shares at $12, and the average volume weighted average price that the stock traded at was 12.50, that means that the trader was able to get a better price than the average person who bought the stock, right? The average price of the stock that it traded, right? So that being said, every single institutional firm, all of these big firms, the person who trades closely monitors the VWAP, okay? So if you're looking, this is what it's going to look like, okay? So the VWAP, you're going to see it's going to be like a smooth line. Usually a VWAP is going to be looking at the past 14 or 20 periods. There's a default that we're going to check right now. And it's going to follow the price, right? The more a stock trades in a certain place, the closer it's going to get to, because it's going to use that pricing information to draw itself. Now, institutional traders are closely going to monitor it, because if an institutional trader has to buy a stock, and let's say an institutional trader, his objective is to buy this stock, well, if the price is lower than the VWAP, he might buy it because he'll be like, yeah, I'm going to get a better price than the VWAP, I'm going to get a bonus. If the price is higher than the VWAP, then he might be like, I don't really want to buy it right now because this is way far from the VWAP. I'm going to wait when it comes back. In the other sense, if the portfolio manager comes and asks the trader to sell a stock, let's say sell 10 million shares, well, imagine the stock is trading below the VWAP. Then the trader might not want to sell it there because that's a worse price. It's a lower price than the VWAP. And if we're looking at somebody who wants to sell, not short, he wants to sell at a higher price. If somebody wants to sell and not long. If somebody wants to sell, his objective is to sell at the highest possible price. If somebody wants to long, his objective is to buy at the lowest possible price. So imagine as a trader, you got told to sell a stock and the price is trading below the VWAP. You don't really want to sell there because it's way lower before the VWAP. You want to sell above it. Now, what's going to happen is when it comes up and it touches the VWAP, you might be like, you know what? Well, at least I can sell at the VWAP, and at least it's going to be at the VWAP, and you're going to sell here, and other institutional traders are going to sell here as well. And that's why you're going to see that the VWAP is going to act as a resistance, because every time it comes and it touches it, it's going to bounce back off it because there's so many sellers here. Comes back, touches it, so many institutional sellers that it drops again. Comes back and might hit it again. So it's going to act as a resistance. And if it does break above it, then it might act as a support, because if it's above it, if it goes too far above it, institutional traders are going to want to sell because they're able to sell higher than the VWAP. And institutional traders who want to buy the stock, well, when it comes back down and touches the VWAP, they might start buying some because they'll be like, okay, well, at least I need to buy some at the VWAP because all day it was higher. So they'll buy some here. And that would make the VWAP act as a support. So if the price is above it, VWAP is going to act as a support. If the price is below it, VWAP is going to act as a resistance. Okay? And that just makes sense because that's what that trader is going to be looking at. That's how he's getting paid. So it for sure drives his actions on how he sends his order and what price he sends his orders at. Now, are you going to use the VWAP blindly across symbols? No, because not all stocks have high institutional ownership. So what you want to do is look at a company that has a high, so let's say I'm looking at Facebook. You go on a company like Facebook. Well, I know that Facebook has an institutional, I just zoomed in for you guys to see. I know that the institutional ownership is 72%, right? Institutional ownership right here. Let me close this. Institutional ownership is 72%. That means 72% of that company is being held by institutions. So I know that a lot of the people who trade this, a lot of these traders are looking at the VWAP. So I want to look at the VWAP as well. Because like I said, I'm not looking at it for myself. I'm looking at it because I'm trying to predict what other people are going to do and how they're going to trade. Okay, so that's why I'm going to look at the institutional. Now, if I'm looking at another firm, okay, if I, let's say I'm going to choose a firm randomly here out of, let's say, the top gainers. If I take this one for say, well, what is the institutional ownership on this one? Oh, just 16%. So the VWAP might be way less meaningful on a stock like that because a lot of people that trade aren't using it. So if your stock is a stock that's highly traded by institutions, you do want to look at the VWAP. If it isn't, then it's going to be less important than a stock that does require it, that does have high institutional. Now, how do we look at VWAP? Let's just put in, let's say, Facebook. Let's open it up. VWAP, you're only going to be able to use it on intraday data. Okay, so on intraday. And let's say I'm going to go here on a 5-minute chart. I'm going to say, okay, well, let me look at the VWAP. You can right click, insert indicator. Okay, and you see you can put VWAP. There we go, VWAP. Click on that. Okay, and now you have a VWAP. So again, I just put a stock by random, but let me just put, let's go and find, well, actually, no. Go and find some highly institutional held companies and look how they act with the VWAP, right? And you're gonna, and let me remove the extended hours here. Okay. And you're gonna see that, again, I don't know if this one is gonna be a good one, but you're gonna see that a lot of times it will act as support or resistance. Now, it's not gonna work for every single stock. Obviously, I just chose one by random, but there are some stocks that it's gonna hold. It's gonna hold with, throughout time. So some of these stocks that a lot of these traders have a big impact on, and they always happen to trade it in that same particular manner, you're going to see that the VWAP is going to hold throughout time, and the support is going to hold, the resistance is going to hold way more often than not. So make sure to go on Finviz, find yourself some stocks, and then see how the VWAP holds with that. Now, the VWAP itself, okay, the VWAP itself, that is not a strategy. We're going to do the strategies in another lecture. The VWAP is just an indicator that you're going to use. It's not the strategy. And it's an indicator that you're going to use to pick entry points. Okay? So if the strategy tells you, hey, I want to buy this stock. Well, good. The strategy tells you that. Well, if you look at it and then you look at your stock and it's actually a highly held institutional, it has a high institutional ownership rate and it's trading, way above the VWAP. Well, I might say, you know what? I'm going to buy it on the next bounce on the VWAP because it's probably going to bounce off it because it's going to be used as support. So it's an entry point, right? Because, with any strategy, even if you make the right call, if your entry points are bad, you're not going to make money. Okay? So it's as important having good entry points as having a good strategy. Now, if your strategy tells you buy, you could use the VWAP for an entry point. And let me see. So, that, I think that pretty much covers volume weighted average price. Make sure to look at it, and you are going to fall on some stocks that have very good behaviors with the VWAP, and those tend to hold throughout time. So I think that does it for that, and I'll see you guys in the next lecture.
Okay, so we just saw Montreal Trading Group's training video on advanced stock trading strategies pertaining to the VWAP. And now that we saw that and it's fresh in our head, I thought it might be a good idea to head on over to TradingView, because for some reason Coinigy has the volume weighted moving average, but it does not have the volume weighted average price. And I'm not sure exactly how they're different. I know they're similar. They've been called the same thing in different circles. But from what I've seen using the VWAP on my charts, the VWAP on TradingView will work at any time scale, right? It'll work on the daily, on the monthly, weekly, whatever. right? But I mean, that's the volume weighted moving average, the VWMA. But the VWAP, on the other hand, does not work on anything over an hour, I believe. And once you start approaching like the hour chart, it starts kind of like, from what I understand, from what I've read in other sources on the VWAP. There's not a lot of sources out there on the VWAP, because it's like it's still kind of trade secret. I mean, it's out, but it's not all the way out. I was just thinking of a bad joke. So what we're going to do is we're going to come in here. I'm going to open up my, this is my BitMEX chart. And I have the VWAP open. It's going to be the white line. But see, when you're looking at it on the hourly chart, it's not accurate for some reason. That was from another source. I can't remember the name of the guy, but he did a podcast interview on the VWAP, and he was talking about how it's really only used on like the 5 minute, like the guy just did, or 15 minute. But the higher you go up, the less accurate it is. So we're just gonna jump here into the 1 minute. And so yeah, it doesn't seem like it's. This is on the XBT on BMAX. It doesn't seem like it's acting well here. It kind of did a bounce, sort of, kind of, but it punched through. It bounced here, came down. Here it punched through. So I mean, if you started seeing a reversal right here, you might buy at 42.38, and then as it crosses above this line, if you want to hand trail it yourself, you might, be able to sell at 43.40. I don't know, however you want to work it. Sorry about that. This isn't obviously one of my professional videos, so there's going to be like background noises and stuff like that. But yeah, so that's that. Let's look at the 5 minute real quick. There's some correlation to the VWAP right here. It seems to, like, maybe it would possibly work well. You're going to have to hand trade it, meaning you're going to have to be there in the charts watching it, because I'm not sure how accurate it would work. Otherwise, take a quick look at the 15 minute. And let's get way in here. So we had a pretty good bounce right here. Well, I mean, to punch through with low volume, which would have been a false breakout to the downside, and then we bounced up. The VWAP shot up right here. Price met the VWAP up top, and then it punched through. So, I mean, you could use it. It seems like maybe some people are using it, and it is pertaining to Bitcoin to some degree. Maybe not as much as, like, say, Facebook. Let's take a look at Facebook. He was using Facebook right now. And because Facebook apparently has a lot of, like, a high level of institutional ownership, high institution. So let's take a look at the 5 minute, like the guy was doing. And seemed to punch through here. So he would have, like, either sold short here or waited until it bottomed out. You get some, like, dojis over here. So I think, like, the doji's far away from the VWAP. So the doji signal the end of a trend, and the trend was downward. We're far away from the VWAP. So after a couple of these, that next day, it gapped up. Which is, of course, a bullish signal. So it continued its trend upward, and this was a nice little $3-4 run. So there you have it. Seems to be somewhat accurate. If you would have bought here at this touch, and this is a 5 minute chart, you could have ridden it up to here and sold, or you could have sold right here, just based off of whatever, like this would have been a signal that there was going to be some downward action. This little hammer right here. So, I mean, whatever you want to use, you can, throw some stochastics in there. He has more videos on like strategies and stuff like that. So you can take a look at that video. I'll show it one more time. But all in all, it's a pretty good course. I hope you guys enjoy. I'm going to cut the video short because I'm not sure how many minutes I can get on YouTube and how many minutes have gone by already. So we'll leave it at there. Hit me up on the chat room, email, Twitter, whatever. And hope you guys enjoy. Cheers.